So good morning, Rhett. How are you doing today?
Good morning. I'm doing awesome.
Great. So I'm Nicole Smith, Remax of Gulf Shores. I'm here with one of my lender partners, Rhett Grant, and he's going to explain to us a little bit about how mortgage interest rates work in relation to the Fed funds rate.
Yeah, absolutely. I mean, everybody thinks when the Feds cut the rates, it should be overnight, and it should be, hey, we should, we're losing all this, that we should be overnight losing this interest, and that's really not how it works. Really, when the Feds cut rates, it's called the federal funds rate. Okay,
Right.
And that's really how the banks exchange money overnight. Okay, that's pretty much what that is. Okay, so how it works is the Feds are focused on two things, and they're focused on unemployment and inflation. All right. So when you talk about those two things, this is the first time they've cut rates in 4 years.
Right.
All right. So it's going to be more like a cruise ship instead of like a speedboat. All right. It takes time for that to kind of sink in. So what you're going to see a big decrease on now is like people who want money fast, like CDs, credit cards, things of that nature. So you're going to see.
I've noticed that already in my
HELOCs,
CDs.
ARMs, things like that. You're going to see a cut in that first. Okay, so that's what you're going to see, a cut in first. Mortgages, we follow more the 10-year Treasury yield. Okay. Why? Because the 10-year Treasury, most people keep their homes for about 10 years. Okay.
Right.
And the mortgage-backed security bonds, they usually historically are about 1.75 to 2% over the 10-year Treasury bonds. Okay. So that's pretty much what we follow. That's a better indication of what rates are going to be for us and what you're going to get as an interest rate instead of what you see the Feds doing overnight.
Okay.
So that's why it takes a little longer for that to come in. Now, for mortgages, we already have that kind of built in. For us, we see discount points, we see interest rates, we see them dropping a little bit. So we had, I don't want to say we can predict the market by no means, because no one can predict the market of interest rates. But what we did see is we did see some discount points, which is the cost to get that loan. You did see that start to decline a little bit. So there was some inclination there that there might be a rate cut for us.
Okay.
But you can never, I'm telling you right now, you can never predict the market.
Right. Okay. So what I understand is that it's a significant shift from the Federal Reserve's standing, and that they are looking to move this rate down to less than 5%. Is that right?
That's yes. If you follow them, they are supposed to continue to drop it as they move forward. Okay. If you watch what they said the other day, they said they're going to look at the market at each meeting. They're going to sit here and look at the data at each meeting and decide how much they'll drop as they go forward. So I hate to say it, you can never predict what the government's going to do. We can sit here and I would have predicted we'd have had a rate cut before now. If looking back in January, but as you see, now we're sitting here in September and just got a rate cut. So it's hard to predict what they're going to do.
Okay. So our advice to buyers, if you're looking now, let's say, and you maybe want to get something before the end of the year, maybe move during the holidays or something like that, should you wait until the next meeting to see if rates drop again, or should you go ahead and line up a program with your lender and maybe have like a rate drop, some sort of adjustment that you can figure in?
Absolutely. I would say that's up to the individual. People know their finances. I tell people right now, if they can afford to buy right now is a great time to buy, because what we're seeing is a lot of sellers who are more willing to give seller concessions, which helps buyers. So if you can afford to buy right now, I think it's a great time to buy. The market's moving, people are buying every single day. So if you can afford, you can financially afford to buy that property you're looking at, I think it's a great time, because we can always refinance you. We can always use seller concessions. We have options to get people in houses, homes, condos, whatever it may be.
Sure. And you can do rate buy downs a little bit. You can talk a little bit about that.
Yeah, absolutely. The discount points, and I say discount points because when someone comes to me, whether it be for a primary residence, a second home, an investment, there's a cost to get that interest rate. Okay, we call it discount points. So say if someone comes to me for a primary residence and they want it at 6.5, it might cost them nothing. Okay, discount points.
Okay.
So if they wanted to buy down or go down to a rate of say 6.25, it might be $1,000 or $800. If they want to go down to 6.6%, it might cost them $2,000. So what you're seeing is not really the interest rates dropping that much, but the discount points and the cost the price to get that interest rate. Okay, the cost it takes to get that interest rate. So that's what you're seeing fluctuate a lot right now.
So we're looking at probably rates maybe coming down more this year.
Absolutely.
And that's a great thing. What else can we tell our buyers that are, thinking right now, gosh, I really like to get into a bigger home, or maybe it's a smaller home.
Sure.
And, we look at the monthly payment. Is that the main thing to look at?
I will say this: I'm in the advice game, not the rate game. So when
Okay.
when you call me and I set you up and we get an application going, I'm looking at the whole person, the whole scenario, what they're trying to do. Okay, it's not just about interest rates. Okay, because once again, we can always refi you. If you get the property or the place that you really want, that's the goal. Okay, we can always find a game plan to get you in that house. We can, when rates do come down, we can use the equity in your house, because as prices stay the same and interest rates drop, that's more equity. Well, we can use the equity to refi. So really what you're doing is, when you have equity in your house, there's no cash there. That's just equity in your house. So we're going to use that equity to get you more or lower interest rates, so you can cash flow your money on a monthly basis, because it's all about cash flow. So that's what that's why I'm in the advice game and not the rate game. I'm going to show you the best thing to do for your mortgage, the best way to get in there, so that way you have cash flow monthly.
Well, we appreciate you taking this time, and I'll put up your contact information so anybody can get in touch with you, and a link to your online application.
Absolutely.
And I appreciate your time.
Sure. Thank you for having me.
Thank you for joining us today, and we'll see you next time.